Okay, saying good morning, Anand, uh, Chandrakant. Good morning. Yeah, good morning, Chandrakant. Morning, everyone. So, how was the paper yesterday? Yeah, I think the paper was theory, full theory. Majority was theory. Yeah, good morning. Theory, yeah, 49. Yeah, good. 49 means you can. And what about ABM, Chennai? ABM, BFM 49, ABM? Oh, then, yeah. Okay. Not an issue then. Definitely. Retail, you'll score it. Huge. Good. Morning, everyone. Good. Retail is a bit easier. Yeah, Chandrakant then also good. 49, 47. Okay. Yeah, I think so. You should because video course for retail. Yeah, you should purchase because see, here in today's these 5 days we'll be covering only cases because it's not possible to cover the full retail portion. I think you should. Anyone who has not purchased the retail course, do purchase it. Okay, and do purchase the retail course because theory is covered in some 30 videos are there. I think so, 30, 37. I don't remember. So yeah, thanks. I can show you the direction, but after all, you will have to do the studies, and that's what you all have done. Yeah, yeah. Then it's okay. If you have this map pack, then it's okay. In 5 days is enough. Retail, I would say 5, 6 days, right? Up to Saturday, it's enough. You follow daily 1.5 or 2 hours routine for retail, and that's enough. Nothing is required. Follow the videos of theory and follow these cases. In fact, these case studies are taken in those videos also. That's also clear. Okay. Here I'll be taking 2 to 3 new case studies which are not there in the videos. Because yeah, I need to get 53 is okay. You'll definitely get 50. Retail is a scoring subject. Okay. You can definitely because see here at least 20-30% portion of retail is covered in your daily routine. Daily routine means what you work because we all work in retail banks mainly, right? So 30-40% portion is covered there, and remaining I've covered it in videos. So let's start with the topic. Okay, I'll directly hit the case studies. Find the encumbrance factor. This case study you get it every time. Okay, every time means there is almost every exam, and it's a easier one. Firstly, find the encumbrance factor. Now, what is the encumbrance? What is the meaning of this word encumbrance? Anyone knows meaning of this word encumbrance? Sure, encumbrance factor you'll study, everything you'll study, it's given in the books. But encumbrance means what? Encumbrance means what? Suppose taking the possession of the property by the one who is not the owner. Got this point? Means who is not the owner, he goes for it. Okay. So encumbrance. Now we go charge creation. Yeah, you can go for that also. That is the meaning. Who is not the owner? Means basically why do we have this encumbrance factor concept over here? This encumbrance factor is there because if tomorrow banks takes the control of that property, so that is the meaning of encumbrance. Property, possession of a property by the person who is not the owner. Okay. Find out study. They might ask you only encumbrance factor. They might ask you only usable FSI. Either of these things can be asked. So land area is 533. Here it's a normal case study which we do it in our daily life. If you have a land of this much, then what? It's like this. Land area 533. Total built up 205 means on this land of 533 square meter, 205 has been built. So remaining is still pending. So this I can utilize logic. Okay. Permissible FSI is 1. So so if I have a land of, what do you mean by FSI? Floor space index. It means that the amount of land which I have, I can build that much square feet construction. Okay. So that 533 I'm having, I can use 533 for construction, but I have used how much? Only only land area and built up and FSI. Okay. So 533 is the land area, 205 is the total built up up till now. So now I have remaining amount. Okay. Remaining space to build up. Rate of construction cost 5,000 per square meter. Rate of land cost 2,000 per square meter. Desired rate of return 9%. Usable carpet area 155 square. Understand this concept, 1/6 of the yield. It means whatever I am getting, how will I get the amount from this? Through rent. So whatever rent I am getting, 1/6 of the rent is gone. Where is it gone? It's gone in outgoings. Outgoing means what? It can be anything. In the sense, suppose some electricity bill, let's say water bill, all these outgoings, society charges, everything, anything can go in by 1/6. Okay. So now it's a simple one-page case study. And that's why I say, see here, now the point over here is the problem over here will be divided into three parts. Okay. One, this desired yield. Second, actual yield. See here, how we have to do. First, we have to calculate desired, what is required. And then we have to see here, what is the built up area? 205. Means what? 205 has been built up by me, constructed by me. So what was the cost for that? 5,000 was for 1 square meter. So 205 into 5,000. 205 into 5,000. This will be my cost of actual construction, whichever I have constructed up till now. So cost of used FSI. FSI is here. Which is the used one in this? 205. And what is the cost of this land? 2,000. Remember, for those who have not dealt in this land problems or this home loan problems, understand this. Land cost is always related to FSI. Built up is always related to construction. Always remember this basic rule. Construction means built up. Land cost means FSI. Okay. Because FSI is always means land area and this land cost. They always be related. Okay. Now, cost of FSI use. So 205 I have used it and 2000 that is a land cost. So 4 lakh 1000 I think so. 4 lakh 10,000. Yeah. So now what have I got? Cost of construction I have got. Cost of FSI means land I have got. Okay. So total cost is what? 14 lakh 35,000. So means what? If I have to set the price of this house, so how will I set the price of any house? Firstly, I'll go for the construction cost, whatever I've constructed. Then I'll go for the land cost, okay, and then I'll add that. So that is the this cost of the house actually. But this is not the actual cost. Total cost. So let me get some profit of 10% on this, and then I'll sell it. This is one way of selling. Or second way of selling is like this. I'll tell him, see here, this is my cost. Agreed. So this is but the fixed cost which I am getting it at any cost. But desired yield means what is the yield I am expecting? 9%. So 9% is my net yield which should come from this property. See, where did we get this 9% figure? See this. Desired rate of return is 9%. 9% on what? My total cost, construction plus plot. Okay. So 9% on 1435. So it comes out to be 129, 150. So this is my required yield, desired. Remember the problem which you'll get in for 5 marks. We will have separate marks for each other, each point. Total cost will have 1 mark. Desired yield will have 1 mark. Then next is, see here, this is what we have come up to desired. Now we'll go for actuals. Estimated yield. What is the estimated yield? 50 into 155 into 12. What is this? 50 into 155. Look at this. 50, where is the word 50? See this. Monthly rent on the carpet area basis, rupees 50 per square meter. So 50 per square meter per for carpet area. And what is the usable carpet area? 155. So anyone who comes on the rent, he doesn't care for this built-up cost. He always cares for what is the this carpet area I can use. Now this problem, many of you who are in the main cities, Mumbai or Delhi or even Kolkata, Chennai, okay, these 4 5 main cities, if you go, you'll always see the rent will be on the carpet area basis. Whereas in other cities, what we see, the rent is never on this carpet, but in usable carpet area is 155 and cost per means rent per carpet area is 50. So now 15 to 155, this is for 1 month. Okay. Now I have to calculate for 12 months. So 15 to 155 into 12, that is 93. So 160 into 93,000, that is 15,500. So what is going out now? 15,500 is going out every year. This is year because this is year 27,500. Now I'll get the encumbrance factor. Now encumbrance factor means actual income, this upon estimated income. So actual upon estimate. So what is the difference over here? Outgoings are subtracted. So 3,000. So it is 0.833. Now what does it mean? It means that even though if the bank takes suppose bank gives a loan on this property, and what happens, this loan becomes NPA. Banks this bank takes the holds of this property, then bank should get a means of net positive income of 0.833 if it is getting a rent. Desired estimated rent it is getting at 19,000, 93,000. It should get the actual rent at 77,500 because subtract this outgoings. Now one part of the problem is solved over here, encumbrance factor. So remember, encumbrance factor is what? Annual yield, net annual yield. हो रहा है buffering. Hmm. Is video buffering to all others? Mm, is the video buffering or okay? Okay, just log in and log out then. Yeah. Okay. For those who it's buffering, kindly log in and log out. Okay. Encumbrance factor is done. Now usable FSI. 533 is the is total. 205 is used. Now 328 is remaining. So value of the usable is what? 328 into 2000 into what is this 0.833? See this encumbrance factor. So why, see here, if you just calculate the rupee value, 328 into 2000, it will be 328 into 2000. This will be my net actual usable FSI. But why have I multiplied this with 0.833? Because bank, whenever bank will take the hold of the property, it won't be interested in the property. It would be interested in the income. So income will be, what is the FSI remaining? whenever you calculate this usable FSI, multiply this remaining FSI with the cost that is obvious, means cost of that land, but also multiplied with encumbrance factor 0.833. So there is the real answer. So 5 marks in this problem will be divided for first is total cost, second is desired yield, second, third this, then third is this encumbrance factor, and fourth encumbrance okay. Yeah, they can ask this estimated yield also. Anything because once important parts are desired yield, total cost, and then desired yield, encumbrance factor, and usable FSI. These are the main four parts in this problem. Okay. So understand, let's come back to this problem. I'll just give you the three thumb rules over here. First, find desired, then find net annual yield, then find encumbrance factor, and then usable FSI. This is altogether a different concept. Okay, these two parts of the problem are related, but this part is not related to at all in to the above problem. Only it is related by a 0.833, this encumbrance factor. Okay, so your thumb rules or your total steps would be: first find the total cost, then the desired yield. Okay, once you get the total cost, desired yield is simple. Second, you'll have to go the find the net annual yield. Once you get the net annual yield, you'll it is buffering. Yeah, one second. Let me see. Yeah. Okay. Remember, retail is a bit easier one. Okay. Yeah, it's happening somewhere. I think so. Internet connection is down somewhere. So even I am seeing this buffering now, some part. Okay. Yeah. It's happening somewhere. I think so. Yeah. Once it has happened with me also now due to buffering. Okay. I have relogged in, but still persists. Okay. It is happening over here, even here as well. Okay. I'll go through this case study again because many of us have gone for this buffering. Okay, so important parts here. This is a case study you will be getting, and out of this, encumbrance factor and value of the usable FSI. These two will be asked separately or together. They can be asked anyhow. Okay, so if anyhow if they are asked encumbrance factor separately or you say in the same problem, you should be able to answer it. Follow the thumb rules. Firstly, find out the total cost. Total cost is cost of construction plus cost of used FSI. Okay. Cost of construction was what? 205. See this. 205 is the total built up area. So this much land has been built up. So 205 into 5,000. This much has been built up. So this is my total built up cost of construction. Now FSI used. Cost of FSI used means what? This 205 is built up. Now I can build anything on this now. So 205 into 2000. Now remember one twist in this problem. If this FSI over here is not 1 but 2, then the things will change immediately. Okay? Things will change means what? Everything will have to be multiplied by 2 then. Because then what happens if 533 is my land area and FSI is 2, then I can build 533 into 2. Okay? So 1066 I on the major locations. Okay? In smaller cities, the FSI is nowadays 2 used everywhere. So it might happen that in exam they'll ask give you the FSI as 2. Whenever they give you the FSI as 2, remember one basic rule: whatever that land area is multiplied by 2. In Mumbai, the FSI is somewhere roughly 4 to 5 also. 5 FSI is possible in Mumbai. Okay. So if it is 5, then what? 5 into 533. Remember this. 530, what is the land area into 5? This much you can build on that property. Okay. Always use this formula. Whatever is that FSI multiply with the land area, and this much you must be able to construct. Suppose if I ask you a simple question over here, only these 3 points. Okay. If the FSI is 3, so what will be the answer? 15. Out of that, 205 has been built up. So 1599 minus 205, so it becomes 1399, 1394. So 1394, I have still the land with me, which I can build up. Okay. Even though this land is 533, but because of this FSI, I have more land available. That is all the problem in main Mumbai and Delhi cities now. Okay. So this much land which I can use, then I'll multiply it with all these remaining figures. But remember this part, everything is on FSI, FSI only. Okay. Everything is on, if this FSI, as the number goes on increasing, the total land area for you, for usable land area, it goes on increasing. Okay. So now here in this problem, the FSI is 1. So 533, I am having 533, I can use it. Out of that built is, total built is 205. So what is the cost of this construction? 205 into 5000. Cost of FSI used 205 into 2000. Why? Because the land cost is 2000. Construction cost is 5000 per square meter. So 5000 into 205 construction, 2000 into 205 land. Okay. So total cost is 1435. Got it? Cut in some time. Okay. Please confirm it's me. All. Is it buffering for all now? Is it okay for all or is it buffering? Others? Others it's okay. Yeah. Others it's okay. Some one or two guys it's buffering. Okay. Yes, buffering more. Okay. I don't know. Some internet connection might be the problem over here. We'll try to this get back to this problem as much as possible because this is important problem over here. Connection dropped in between. Okay. There's some internet problem due to rainy seasons nowadays. Okay. I'll repeat from starting over here. See this. Always there are three steps in this problem. First, find the total cost, then find the annual yield, net annual yield. These are the first two important steps. Okay, total cost and net annual yield. So, how to find the total cost? Total cost is always here. Whenever you build a house, how will you construct the? How will you decide the this cost of the property? You'll decide it on the basis of construction, plus you'll decide it on the basis of land. So land cost is 4 lakh 1,205 into 2000. 205 means what? This is 205 square meter. This is the built up. What has been built up into land, into this land cost. So this is my land cost 205 into 2000. This is my used land, and construction cost is 205 in into 5000. This is my construction cost given over here. So I'll find out the total cost over here. Then I'll find out the desired yield. Desired yield is at 9%. Here it's given. Desired rate of return is 9%. So I'll find out the desired rate of return and then get to this point 129150. Estimated yield. Estimated yield is what? 50. This is my CR. It's given over here. Monthly rent is 50 per square meter. So 50 into 155. What is this 155? This is the carpet area which is used. Always the rent owner or the rent payer will always give the rent on the carpet area. He won't give it on the land cost. Because if you go on rent, what will you see? Difference between carpet area and floors FSI. See this FSI is used for full land. What is the difference for carpet? Carpet is generally 15% lesser. Okay, whatever has been built up, out of that 15% is generally gone in walls and these pillars and columns, everything. Okay, so now rent will always be calculated on the carpet area. So estimated yield is what? 15 to 155 into 12 months. So 93,000. Outgoings is what? Here, 1/6 of the yield it's given. 1/6 of the yield. So 1/6 of this 93,000. 15,500. So this is my outgoing. Now incoming is what? 93,000. Outgoing is what? 15,500. So what is my net income? Encumbrance factor. Encumbrance factor means what? Net annual income after all outgoings upon annual income without outgoings, means whatever I'm getting gross, it's like that, gross profit and net profit. Simple, remember this. Net profit upon gross profit. Okay, simple rule, right? So gross net profit is what? 77,500. Gross profit is what? 93,000. So net upon gross, that is the meaning of encumbrance factor. Okay. Now usable FSI. So usable FSI is what? 533 was my total this what land area, minus 205 I've used it. So what is remaining? Subtract it. So 328 I can use it more. But this 328, this is the land which I can use it. What is the cost of that land? 2000. So 328 into this cost. But I am not only concerned with the cost, I am concerned with the encumbrance factor, means income which I will be getting. So value of this land cost will be, this value will be 328 into 2000 into this encumbrance factor, means this much income I will be. Okay. Now second one. Okay. Dropped. Okay. You, because there's some internet problem. Yeah. 12 months. From where did we get this 12? See this. This 12 is for months here. 50 into 150. See this. 155 is carpet area. 50 is per square meter. But it's given that monthly rent. Remember this, monthly rent. Monthly is 50. So I want it for 12 months. So 50 into 12 into 155. Okay. Got this point? Everyone clear? Yeah. Got this point, Shivam, now? 12 from everyone. From where did we get this 12? Because it's a monthly rent. Okay. Yeah. Yeah, you'll get the recorded class, not an issue. And this PPT is also available. See here, those who are getting the buffering, you can definitely get the recorded class. Okay. Next one. This is also a simpler numerical. Purchase price. See, this is on capital gain. Some property is given. Okay. Purchase price of the property is 10 lakhs. Year of purchase is 1995. Sale price is 25 lakhs. Year of sale is 2008. See this, purchased in 1995, it's the, let's say, flat. Purchased in for 10 lakhs in 1995. Sold in, what is this? CII purchase. This is the government rate given. Always remember, cost inflation index means what? Understand this. Cost inflation index, one sec, hold on. Yeah. Yeah, now I'll start. Yeah. Now it'll start, I think so. Yeah. Okay. Video. Just one second. I'll just check out for this what is happening for this video part. Let me check. One sec. Can you guys hear me now? Hold on. Yeah. Here, what I'll do is I'll close this video part because what happened, this video, right? Somebody has told me that it is consuming a lot of bandwidth. Video is consuming this. So I'll close this video part and go only for uh, this audio part. Okay. So that you can get it, whatever is point over here, point of discussion. Okay. So now, what wherever we were at cost inflation index here. What do you mean by this cost inflation index? Cost, because this word is important. Here, you'll get a question on this theory part also. Cost inflation index is the measure of the inflation used to calculate long-term capital gains for sale of capital assets. Capital gains is a profit that you buy from selling an asset, which can be real estate, jewelry, or stock. One important part you always remember, capital gains is not only applicable to property, it is applicable to anything, whichever you have bought and whichever you have sold. Anything, okay? Any real estate, jewelry, stock market, anything, okay? Yeah. Yeah, no selection batch. No, because for retail we don't have the selection batch. Okay, next. Uh, Now coming back to this. So see this important point. What is CII? It will be asked in the exam. What is CII? CII is a measure of inflation basically. This is generally the government rate. Okay. CII is generally the government rate, means basically related to government rate. So see this. So the purchase price is given as whatever 10 lakhs, selling price is 25 lakhs, years are given, cost inflation index. See, these indexes are always, indices are published by the government if for every year. And the base price is always decided on these indices. Remember, there are two prices always for any property. One is the base price, means the government price, and second is the market price. Now, what happens is generally, I'm telling you, government price is lower than the market price. I'm telling you generally, but I've seen in major cities, the government price is higher than the market price. During this COVID situation, I had seen this, or before this COVID also. uh, Government has increased the base price hugely. So what happens? Any agreement which is to be done for any property, that agreement is always to be done on the this government price, index price. Okay, means what happens? Many a times, what do these people do? They make the agreement on the government rate, and remaining part they take it in black, means cash money. So to avoid that, nowadays what government has done, see here, this is also an important part for you to understand because such questions might come. See here, in retail, almost 50% questions are from the books, but 50% are from the general knowledge. Not 50 actually, some 20-30% at least. Means 70% are from the books, but 30% are from general knowledge. Okay. So cost inflation index means this is the government sponsored or government given this in inflation index. Okay. So at the purchase it was 281 and sale it is 582. Now we have to calculate the indexed purchase price and then the capital gain. Now capital gains will be of two types here. Capital gains will always be of two types. One is with indexation and second is without indexation. Remember, in India we follow with indexation. We don't follow without indexation. Remember this concept. In India, we follow with indexation, so 20%. So how to calculate this? See this. Let's get, you'll get the problem on both, huh? Without and with, both. So without indexation, here, I purchased it in 95 for 10 lakhs. Sold it with in 2008 for 25 lakhs. This is easiest one. So what will I do? I'll just find the difference. 25 minus 10, 15. 15 into what? This is a 10%. So 10%. 15 into 10. That much is my capital gain. See this, I might have solved it over here. See this. 15 lakhs into 10%. So that is 1.5 lakhs. So this is my capital gains. I'll pay the tax, capital gains tax on this. Okay. Now second part is with indexation. With indexation means what? Here what will I have to do? Now this without indexation is clear to everyone because this is simpler one. Very simple without indexation. Okay. Now go for with indexation part. So I'll repeat this without indexation again. Just subtract the values of the given prices and into that 10%. 10% means what? 10% is for this. See this tax without indexation. This is what we have to remember. Without indexation, 10%. We have to remember this. With indexation, 20%. Okay. So now go for this with indexation part. With indexation part means what was the index at when purchased 281? What was the index when sold 582? So what will we do now is 582 over here and 281 over here. So now the when I purchased it, the price was 10 lakhs. So 10 lakhs here. Firstly, what we should do? When I purchased it, the index was 281 and the price was 10 lakhs. So I'll find out based on this index itself. What should be my price now? Means what? Suppose instead of purchasing this, understand this line very clearly now, whichever I'm saying, okay? Suppose if I had purchased this land and this whatever flat or land, whatever it is, suppose if instead of purchasing it in 1995, I would have purchased it today in 2008, then what would have been the cost as per the government rate? So in 1995 it was 10 lakhs because the index rate was 281. Now it is 582. So what will be my cost if I go to purchase that land property now as per the government rates? So what will I do? I'll just cross multiply 10 into 582 upon 281. So this 20.71 will be my cost of the flat or that property if I purchase it in 2008. Okay. So now what are we doing? We are comparing apple with apples. Otherwise, what happens? I am comparing the price of 2008 with price of of 1995, which is wrong because many years have passed between this, right? So I should compare always whenever I calculate the profit. Whatever, what is the main aim? Our main aim is to calculate the profit. So if I have to calculate the profit, I have to compare apple with apples. Means what? I have to compare this price, whichever selling price I've got. See here, I've sold it in 2005 for 25 lakhs. So I have to compare this 25 lakhs with the cost price in 2008 itself. It itself. So now using this indexation, what are we doing actually? We are bringing the cost price in 1995 to the cost price in 2008. So this is my cost price in 2008 respective to the cost price in 1995. Okay. So 20.771 would have been my cost price in 2008. Right. So if now get this point, see this. What is my then profit now? I would have purchased it in 2008 for 2.71 and I've sold it for 25 lakhs. So now I can get the real profit. So 4.28 is my real profit. So what is my long-term capital gains? Long-term capital gains is 4.28 lakhs into 20% because with indexation it's 20%. So 4.28 into 20%. So it is 0.85 lakhs. Now understand this part. If it is 0.85 lakhs over here and here it is 1.5 lakhs, means what? It means that here, even though without indexation the percentage is less, with indexation the percentage is more, but then also I'm getting lesser capital gains. Whereas in without indexation, I'm getting higher capital gains. Okay. So remember, first part of the problem is up to this only, long-term capital gains. How to calculate the long-term capital gains. See here, now the video is buffering. No, na, because I've stopped the this audio is I've stopped the video. Okay, so now it's okay, na everyone. Should I try? Yeah, guys, everyone, okay now? It's okay. Yeah. So got this point, everyone. I'll now try with the. I think the bandwidth might have returned. Let's check with the video. Okay. Let's see. Yeah. Okay. So now we'll repeat this problem again. First part of this here, this is the only first part of the problem, means how to get the long-term capital gains. After second part of the problem is there, how to save these long-term capital gains. Okay. So first part we'll repeat it again. See this. Price of the purchase price is 10 lakhs, sale price is 25 lakhs, purchased in 1995, sold in 2008. Now these are the inflation indices given by the government. Okay. At the time of purchase in 1995, it was 281. The same index when I sold it, it was 582. So now I have to calculate what index purchase price and capital gains. So both the things I have to find out. So index purchase price means what? Basically, remember it's a government price. Means simple rule is instead of purchasing in 1995, if I purchase something in 2008, then what will be my cost price? That is the meaning of this indexation. Okay. So what are we doing over here? Here, capital gains are always calculated using two methods. One is with indexation, second is without indexation. With indexation, the rule is 20%. Without indexation, the rule is 10%. Always remember this. Without is 10, with is 20. Okay. Now let's calculate one by one without indexation. See this. I purchased this property in 1995, sold it in 2008. So without indexation is simple game. Like 10 lakhs purchased, 25 lakhs sold. So what is my net profit? See this. 15 lakhs is my net profit. So if 15 lakhs is my net profit, then what is my capital gains without indexation? 10%. So 15 lakhs into 10%, 1.5 lakhs. See here. This is what I have to calculate without indexation. You might get this problem separately without indexation, and with indexation you might get it separately. Okay. So now we'll calculate with indexation. See here, for calculating anything with indexation, use the simple formula. Use the simple logic. In fact, before coming to the formula, use the simple logic. The logic is the cost price of 1995 is to be brought to the cost price of 2008. Only then you will be able to solve the problem correctly. Cost price of 1995 is to be brought to the cost price of 2008. How will I bring this cost price of 1995 to cost price of 2008? Means what? What am I saying? I am saying that instead of purchasing this property in 1995, if I would have purchased this property in 2008 using the indexation indices, then what would have been my cost price? This is the meaning of indexation. Instead of purchasing this property in 1995, if I would have purchased it in 2008, then what would have been my cost price? So how will I get this? This will depend on the indexation price, these indices. In 1995, the index was 281. Given over here, see this index was 281, and in 2008, the index is 582. Okay, so 281 was the index, and price was 10 lakhs. So if 582 is the index, then the price will be 10 into 582 upon 281, right? So it's a direct proportion. Index increase, price will also increase. It won't be 25 lakhs. It will be something else. Okay. So 10 into 582 upon 281. So it becomes 20.71 lakhs. It means what? Instead of purchasing this property in 1995 for 10 lakhs, if I would have purchased it in 2008 with this index, I would have got this property at 20.71 lakhs. So now use this simple rule. The rule is in 2008, I purchased this property for 20.71 lakhs. And in 2008 itself, I sell this property for 25 lakhs. So am I gaining or losing? I'm gaining. How much am I gaining? Say this. 25 minus 2.71. This is my total gains here. You should always compare with indexation part, apple with apples. 2008 selling price with 2008 cost price. 2008 selling price with 2008 cost price. What is the meaning of indexation? We are just bringing the cost price at any year to the present year. Okay, that's the meaning of this indexation part. Okay, so it is just based on cost price. It is everything is to be done for the cost price over here. Okay, so 25 lakhs is my selling price, 20 lakhs is my cost price, 20.71. Okay. So I'll just subtract it and get the profit. So what is this profit? This profit this is my net profit. Now, if this is my net profit, how to calculate the capital gains over there then? This is my net profit into 20%. Why? Because with indexation it's 20%. Without indexation it's 10%. So 4.28 into 20%, you get it as 0.85 lakhs. Okay. So 0.85 lakhs, all theories. Yeah. Not an issue here. Those who have not been able to clear BFM never do such logic. Some guys apply, huh? That BFM is not clear. So next time I'll give all the three. Then I'll get that 45% rule, 45 marks rule. Don't do that. Clear whichever paper is possible, clear it immediately. Okay. Don't wait for that 45 marks rule, anyone. I would always suggest it. Whichever paper you can clear, clear it fast. Okay? Always fixed. Yeah, yeah, 10, 20. Always fixed. At least now. See here. Capital gains, at least now government has given this given as 10 and 20%. Next year, if they change it, that it's a separate problem. But for now, for exam, it's 10 and 20% fixed. Okay. So this problem is limited to getting this long-term capital gains. Now, the next point will be how to save this long-term capital gains. Means this is what, here, always remember, this problem you will always face in your daily life also. Whenever you purchase a flat some time and sell a flat after some time, you will always have to pay long-term capital gains. Otherwise, government will catch you if you don't pay this long-term capital gains. Okay. Now the point is how to save this long-term capital gains. See, this 0.85 lakhs is my net capital gain. So this is, I have to pay the tax on this 0.85 lakhs, not on this 4.28 lakhs. Always remember. Okay. So this 0.85 lakhs. Now what is the point over here? So this point is this 0.85 lakhs I have to save anyhow. How to save that? Here. The ways of saving this long-term capital gains is number one, you can invest this part, at least this part, in another property. Suppose if you have sold a flat, then you can invest this part in another property, another flat. Okay, you can buy another flat for at least this amount. Here, whatever was your earlier price, means your we call it principal, 10 lakhs, 25 lakhs. Government is not concerned about that. Government says that is your money, you use it. We are only concerned about the profit. Government also always works on profit. Okay. You have gained 4.28 lakhs using indexation. So what you do is you pay tax on this for 0.85 lakhs. Okay. So what the government says, if you have to save this tax, what you do is, what is your net profit after indexation? 4.28 lakhs. So government will say, what you do, you invest this 4.28 lakhs. See this, it's about this 4.28 lakhs. Okay. You invest this 4.28 lakhs. Okay. And where do we invest? Either number one in a new flat, point number one, or point number two, invest in some capital gains tax bonds. Now, what are those capital gains tax bonds? Those are issued by REC, means Rural Electrification Corporation. It's a government company. Second, it is issued by SIDBI also. Now, it is issued by NHAI also. So, these all separate government companies issue the this capital tax saving bonds. We have to invest in that to save this 0.85 lakhs. Otherwise, we'll have to pay this on 20% at 0.85 lakhs. Mean this is my total tax which I am paying, and this is my net profit after indexation. Okay. So 4.28 lakhs I have to save. I have to invest it in some new property for flat or in this CDB bonds or this REC bonds. Now there is one more rule regarding this property also. In how many years do I purchase this property? Sure. Suppose if I have gained this, will I get this property immediately? No, I won't get it. Because if you have sold some flat, you must get some favorable flat so that you can get it, you yourself should find it worth. Only then you'll purchase it. Only for saving this taxation part. Should I invest this money in anywhere? No. So that's why government has given a leeway also for that. The leeway is this 4.28 lakhs, which is my capital gains. I can keep it in some escrow account. Escrow means what? It's a separate account prepared for this indexation by me. Remember this for exam point of view. I have to keep this capital gains in the escrow account for 2 years. Now, again, there are two rules over here. See here. I have to keep it in the escrow account, and within 2 years, I have to purchase a new flat. Within 2 years, okay, I have to purchase a new flat. Now, there is a sub condition to this. Now, what is that sub condition? See here. If it's a ready made flat, then I can purchase it in 2 years. Understand this concept very clearly. If it's a ready made flat, then I can purchase the flat in 2 years. But if it's a under construction flat, then the flat should be completed in 3 years from the day on which I've gained this money. Means today, if I've sold this flat, earlier flat, okay, and today I've gained it 4.28 lakhs. So This 4.28 lakhs from tomorrow itself, I'll have to keep it in the bank in the escrow account. Point number one. Okay, not in FD. I can't keep it in FD. Okay, I have to prepare it a separate escrow account for indexation and keep it in that. Okay, understand there is a separate account in the banks for indexation, and that account has a separate heading. It's called as escrow account for indexation. So I have to keep this money in that for 2 years or 3 years. So 2 years if I'm buying a ready-made flat, 3 years if I'm buying a under construction flat, but that construction of that flat should be completed in 3 years. Okay. So understand this concept over here. Again, I'll mark it over here. See this long-term capital gains LTCG. LTCG. Okay. Understand this. How to save? Save. Okay. Save means what? Keep point number one, don't buy any property. Buy these REC bonds, REC or CDB or any company bonds. Nowadays, NHAI is also giving NAI. Okay. Now, NHAI also has write it over here because they are also issuing these bonds now because government wants money for infra. So all these bonds, you can directly invest it immediately. Suppose if I earn this money today, see here, I'll give the dates also. Let's say that today is what, 3rd July? 3/7, okay, 22. 22. Today is what I've earned is 4.58 lakhs. Today's date, I've earned is 4.58 lakhs, okay. So if I earned it today, from here, I have 2 years. So see this, 3/7/22, 2. 2 years for ready-made flat. Okay, and 3 years for under construction flat. Under construction. Okay, but remember the under construction flat must be completed in 3 years. This is important part. Okay, this under construction flat must be completed in 3 years. Okay. Oh yeah, why only escrow account? Yeah, see this. Why only escrow account means even I had the same problem. Means I have sold few flats earlier in my life. So what happened? I used to think, why do I? This is my money. 4.28 lakhs is my money. Why should I keep it in the escrow account? Why shouldn't I keep it in the FD for me? Right? It's an FD for me. So if I keep this in FD and then buy the flat, then what's the problem? But no, government income tax rule says that it has to be kept in the escrow account. Why escrow account? The reason behind that, what they are saying is here. It says this profit is of the government, means it's your profit, but you have not paid a tax to the government on this. So it's not yours completely. That's why you have to keep it in the escrow account. And we have to follow the income tax rules. Income tax rules strictly say keep this in the escrow account, not in the FD or savings account of yours. Many a times what we do, we make an FD, at least earn some interest of 5%, 6%. Why to keep this idle? But government says no. If that bank gives that interest on escrow account, that's a separate part. But you have to open it as an escrow account. Here, practically nobody does this. Many few people do this. Some means normal retail person doesn't do any escrow account, or even if you go in your bank also. Even if I ask you today, okay, with loan before the sale of the, yeah, then also it's allowed. Yeah, this is also allowed. Okay, I'll come to that also. See this. I'll come to this and that also, Pradeep. See here. Suppose if I ask you today, how many of you have opened escrow accounts in your bank? I feel none of you might have opened up till now escrow accounts because these are not used in retail. Very few. Nobody comes in retail branch to open escrow accounts. It's always a corporate account. Escrow means what? Account open in my own name. Oh yeah, in my own name. Yeah, you can open it. Here, I can open it. Vishal Mantri escrow. I can open it. Not an issue. I can open it with the name escrow on this because it should be termed as escrow. It's like a parking account. Yeah. I understand. I'll give you one simple logic for this escrow account. What it is. Suppose if me and you do a deal and we decide that some 2 lakhs rupees is to be given to you after some years, okay, some months, let's say 2 months, okay. No, but you are also not confident, and I am also not confident, okay, that this money I will use it or you will use it, okay. So then what do? We open a joint account in that bank under the name of escrow, okay. So what happens? This